Friday, July 26th, best day to day trade today, guys. Here's what we've got going on. The market's certainly not making it easy. Amazon reports, great report, increases its guidance. The only metric it really misses the numbers is on earnings per share. Well, it never actually stopped Amazon from moving higher when it missed on earnings per share. As a matter of fact, that's been the list of the concern for the investors. Because for 15 years, Amazon's been losing money. It never actually reported earnings. So the main metric was revenue number. Had great revenue increase, had great forward-looking projections on the revenue numbers, yet the initial reaction is just, it's a non-event on Amazon, unfortunately. But this initial reaction lower is happening on low volume. So in the prior instances, when Amazon dropped on low volume after reporting earnings, at some point, the day when the market opened after the report, they did drive the shares in Amazon substantially higher. That's what the history shows us. So despite of this really non-event reaction, we are looking to buy shares of Amazon. So congratulations to you guys that have been able to be disciplined and not carry a big position overnight, or making sure you didn't have a position overnight with the options that expired today. For those of you that are holding contracts that expire in a few weeks, you guys are fine because they will buy the dip. Actually, history, Netflix, and Microsoft point to the next move higher in Amazon. We're going to take a look at the chart right now. There is a concern. The main concern from yesterday is the fact that O'Reilly and AutoZone, which have been all-time favorites for institutional investors in this auto parts industry, which is sort of retail industry, right? The sector all of a sudden turns bearish. And it's not the fact that it's turned bearish, but the way that it's turning bearish. They were actually breaking a level in O'Reilly of about 400, and AutoZone had some positive reactions at the same time. And then all of a sudden, on the dime, these things turn around midday, about 11, 12 o'clock. So very important to see this behavior. Take a note of it, not to be freaked out by it, but know that if we've seen other sectors do this intraday reversal after earnings, that is definitely trouble for the market, because it tells us that despite of some institutional investors being highly bullish, there's sellers, they're coming out, and they sold the hell out of O'Reilly. And so that ended up being a horrible trade for me. But the most important thing is the lessons that can be learned from that is the fact that beware that this bearish reversal could be happening in other sectors. And so if we see any signs of that, any signs of bearish reversals, we're getting in out of the calls. We're actually jumping on the put side, because if we can catch some good reversals like O'Reilly and AZO provided us with yesterday, guys, these are some tremendous opportunities, and I'd rather not miss them. So definitely don't want to be on the wrong side of those. Now, buy, tech stocks still in place. Of course, Google is up $100. Amazon is down $40. I think overall, though, they are continuing to accumulate shares of Facebook and Apple, which is also going to be positive continuation for Google and Amazon. Guys, here's a big red warning, okay, that is becoming a big issue. We are actually failing to break out from a cup with a handle. And what's more concerning is now it's been substantial amount of time, and Amazon had plenty of time to break out. Also did the markets. So if we are running up against this level of on S&P like 3,023, 3,027, and we don't break out like within the next 5 to 7 days, it's time to really reconsider the strategy, because the market is really losing steam. It should be breaking out like now. So if we're seeing some crazy stuff happening to Amazon, they should be buying the hell out of it today. But we're seeing some hesitation in some of the best stocks moving higher. Meaning, if we see hesitation in Microsoft continuing hitting all-time highs, and Google after a $100 move, of course, you could expect a little bit of profit taken. But overall, over the next few days, it should be moving higher beyond the level where it's trading so far pre-market was about 1220, 1230. All these things, guys, they are some concerns. They're not anything to panic or reconsider the strategy entirely. However, in the past, when we've been hitting some of these high levels, hesitation is a negative sign. So we will be watching carefully what happens today and Monday once we attempt to rally back out of this towards the top of the part of the cup with the handle formation. Now, also, why is it such a concern is because we're also failing to sprint higher intraday after creating a reverse head and shoulders. So when we are failing to break out with a couple of handles and we're actually getting a failure to sprint after this reverse head and shoulders, these are signs of great hesitation in the market. So it could be maybe just the fact that they're dragging their feet, waiting till July 31st. But we definitely want to see these formations being completed, and that's not the case right now. So that's the big concern. With that said, we're still highly bullish on the market, but we're seeing further signs of deterioration. It's definitely going to be time to reconsider the strategy. So recent history in Netflix tells us that Amazon will indeed run higher. You see, after a couple of days of distribution in Netflix, after Netflix actually missed an earnings, right? They started buying it right here at about 305, and they kept buying it now for about 3 days in a row on what's notably higher volume. So even on bad report in Netflix, they're coming in after things cooled off a little bit, and they are buying. So last Friday, actually, we were saying Netflix was going to hit 330. So I think pre-market so far, it's very close to that number. But what's interesting is the fact that all these FANG stocks, they're not getting like immediate pop, with an exception of Google. I think they are slowly catching traction. And if we were to lay over the behavior of Netflix, as you see on this chart, if we were to lay over the behavior of Microsoft, okay, we will definitely see them buy the shares in Amazon today. As far as the tunnel, this is a very important part, because in the tunnel yesterday, when we were getting to this 3,027, when the market opened, right, we had a sharp sell-off. That is not what we want to see when we're breaking above. So this was this cup with a handle. We should have went straight up yesterday. As a matter of fact, the fact that we got a move too instead of a bullish move is just highly, I mean, we've never actually, for me, keeping track of these market sequences for the duration of the last almost 4 years, we actually never had a situation where we had an 8 followed by a 2. So, but it did happen yesterday. So just highly odd situation. Against all the odds, this 2 comes out, and it does happen right after the move 8. So it could be, again, just 1 day off, and we'll see. I mean, typically, we could get a few runs at these highs, meaning yesterday we dropped off. I think we're going to take another run at it today, Monday, and the crucial point is going to be observing what is actually going to take place when we are at that level, because that's what's really going to determine whether the markets will eventually break out higher or not. So the signs to look for is any hesitation when the market gets back to these levels of 3,027. And keep paying attention to that level starting with the 3,023. So within those 4 points, 3,023, 3,027, there's going to be very important behavioral patterns that we're going to observe. If the market starts selling off the second time we get there, guys, there is no time to wait. We just reverse the position, get on the put side, because we can easily do what we've done, and that's revisit that level of 3,000 rather rapidly. So, and as you can see, some of these stocks produce some strong sell-offs intraday, which are highly profitable on the put side. We don't want to miss them. Now, I don't want to sound overly bearish, because overall, the strategy of buying the dip is still dominating the institutional behavior. But I certainly wouldn't want to miss some of these day trades. Yesterday we certainly did. So keep an eye on this behavior. Overall, the reason why we're bullish, if you look at the 5-day tunnel, right, it's a solid uptrend. 1, 2, 3, 4, 4 solid higher lows right here. And the same thing is actually taking place yesterday. If you take a closer look right here, this is exact resemblance of what was taking place over the last 4 days. Now, you wouldn't think that yesterday was bullish. However, if you take a closer look at the chart and the buying behavior into the close, despite the sell-off, what looked like a totally red day was actually a bullish day overall. Now, we'll take a closer look at that in just a second. But as far as Amazon, probably a lot of questions about that, so let's go ahead and address them. Amazon hits a level, first moves higher, which was negative, sells off to 1,900, and Now created a pretty solid support at about 1920. So at any point, if the market opens and it trades at 1940, 1950 level, if it pulls back to 1920, that's where we buy. That's where we buy calls right here. 1920 is your buy point. This is where it's been stalling at 1970. If you get in at 1920, it's a good idea to start taking some gains at 1970. That's just for the purpose of the day trade. Now, it may never actually drop to 1920. It may go, let's say, to 1930, 1932. So you can actually start buying calls there in the expectation of selling them higher right here. Now, for those of you that are holding longer-term expiration, I think over the course of the next 72 hours, we'll see Amazon back at 2,000 plus. So, ultimately, it will take another shot at 2050 level, considering the market environment and considering that overall things are rather positive despite of all the pressure that these technology stocks have had. And clearly, I mean, they're just maybe being a bit too picky, and sometimes we've seen these technology stocks like Microsoft initially pops, sells off, and then they take it to the same level again. So there's clear buying behavior. However, in certain stocks, it's just been happening at rather different speeds. And maybe we'll see a good bit of buying in Amazon coming in later in the day. Now, as far as Google, guys, this is a bit of a tougher trade. Clearly, in Amazon is just a black and white. You buy the dip if it falls to a certain level. You close some gains once it hits a certain level. With Google, I mean, it's already up $100, right? So the ideal situation here, when you see this, very rarely does Google completely reverse and give up all the gains. So we're not expecting the situation that we've seen in O'Reilly or AZO yesterday. What we are expecting is a possible pullback that we would be using as a buying opportunity. So if it falls back to 1,200 or closer to 1,200 level, as you can see, that's where the majority of the volume was coming in. So this would be a good entry. Now the question, will it actually ever pull back to this level at the open? That's what we're going to find out. But if it does, we would be buying Google calls, various expirations right here. Clearly, for those with the small accounts, I mean, that's what you want to do. You want to buy today's expiration. Let's say Google gets close to 1,200. You buy 1,200 calls, 1,205 calls. You wait till it bounces back, and it's likely to revisit that level again of 1,243. That's where you close your position out. There's your trade. Now, here's my favorite trade, and it's not Expedia, but a correlation type trade. We're actually looking to buy BKNG calls this morning. So Expedia report is rather positive. The stock is up, and it's getting pretty close to all-time highs. Expedia actually never traded above $152. So considering it's getting really close there, it shot up to 146, given some of the gains, but it looks like they're buying. The accumulation is strong. So I like this setup. I think the stock will move. They will buy this dip in relation to this number here, and they will move the stock higher. However, the option play that I like would be on BKNG, and so far pre-market, it doesn't look like it's got any strong reaction, any volume at all, but they were buying, notably BKNG into the close yesterday on stronger volume. That represents an accumulation distribution. Basically, they were saying, hey, we are liking the idea of Expedia reporting after hours. We think the report is going to be good. So they were already buying the stock in the expectation of that. What makes the case stronger is the fact that you got just now formed a bullish crossover, this blue line across an orange line. You have strong buying behavior going into this Expedia report. You got a very vivid cup with a handle right here, guys, and pretty solid setup for a breakout right here. So again, we're temporarily seeing some failures out of the cup with the handles, but I can't help to see this one here, and everything looks just perfect on this one. So we are expecting BKNG shares to move higher today. So as soon as the market opens, I'm going to start buying the calls on this one. Also, another positive factor is you can see this crossover. This crossover already taken place, but this crossover in the MACD is just about to take place, and that's a bullish crossover. Again, finally, we're seeing some high lows 4 times in a row on the accumulation distribution. Tells us that people are getting interested in the stock, even as it gets pricier. So there's your trade. That's my favorite trade for the day, guys. Buying 1900, 1920, 1950 BKNG calls today. Expiration and next week expiration. Today, yesterday's market move on July 25th was a move too. Clearly, we pop, we drop. Now, everything looks very bearish, right? Not so fast. One of the main observations from yesterday which why I was so bullish sending messages in the group, was the fact that intraday we actually had this reverse head and shoulders. So even though this was a move too, this was a rather bullish development. And I was basically sending messages when we noticed that second higher low being created, that the market was moving higher. Now, interestingly, as you can see, the highest volume of the day is right here on this last move higher after this last dip. So that was the highest volume, guys. So they were buying this move too going into the market close. So far pre-market we're up a few points, but we didn't get a strong reaction off of this reverse head and shoulder yesterday, but I think we will today. That is why I believe visiting these levels of 3,020, 3,023, 3,027 could actually materialize today. Today's sequence is 8-2. Again, we've never actually had a sequence like that happen ever. So the probability of it was so small. You know, typically you get an 8-7, 8-1, 8-8, anything but an 8-2. But it did take place. So this is how it looks, guys, on the chart. Here was your move 8, going to the moon. Here was your move 2, completely reversing the move. Now, again, the most important observation is in either cases, 8 is a bullish move, so you'd expect them buying on stronger volume into the close, but you wouldn't expect them buying a move 2 on stronger volume into the close, but that's exactly what actually took place. Importantly, that it is confirmed on the accumulation distribution actually climbing as they are buying this into the close. 27782 is the 5-day sequence, guys. Watching carefully again what is actually going to happen once we hit this orange line. This orange line represents the level of 3,023, 3,027. So far, overall uptrend is there. So far, they are continuously buying the dip. The question is, how excited the institutional investor is going to be once we visit this level the second time. If we don't break this level on the second time visit, things should be reconsidered at that point. Next move for today, we are expecting a solid 7 or 1, but we are definitely keeping an eye on another crazy move like a 2 yesterday, which could take place around 10, 11. Now, we don't think it's actually going to happen to the entire market, but we are going to be paying close attention to certain sectors, as we've observed in our rally in the outer zone sector. That reversal came rather rapidly and unexpectedly. We wanted to see if there's going to be further signs of those type of reversals in other sectors. VIX is still on track to hit 11 by or on July 31st. VIX trading tunnel. We made an attempt to sort of rally in the VIX a little bit, hitting 1354 yesterday. But so far, if you combine the action between yesterday and pre-market, you get a solid head and shoulder pattern, which is rather bearish. It tells us that VIX will drop today. Key takeaways, guys. We're still buying calls on the dips. Now, with that said, we are watching for any signs of bearish reversals around 10, 11 a.m. in any particular sectors to avoid the situation like O'Reilly Amazon yesterday. If there's any hesitation at 3,023, 3,027 level intraday, we are cutting the calls. Not the calls that may be expiring, you know, a month from now, but we're cutting the calls clearly that expire today, and we are reversing them into puts for a temporary drop, possibly revisiting the level of 3,010, maybe 3,000 level. So very important day today, very crucial, guys. Essentially for the markets to break out higher, this level right here needs to be bridged on strong volume. If there's hesitation when we get there and just things are just not happening, or we're seeing some quick reversals as we're visiting these levels, this is going to tell us that the way to play the end of the day is to actually buy puts, not calls. But if we're getting there nice and steady, that is a sign that it's definitely makes sense to stay with the calls and not panic. Guys, with that said, challenging day, but some challenging days bring some amazing opportunities. With that, trade like a rock star. I'll catch you guys on the next trade Monday.